Europe's energy troubles haunt Euro. Asian stocks. Sydney Asian stocks have been down for a seventh directly consultation on Tuesday after a renewed spike in European electricity expenditures stoked fears of recession and pushed bond yields better, while tipping the euro to 20-year lows. European stocks regarded set to follow Asian equities. EUROSTOXX 50 futures and FTSE futures were each off round 0.2% after sliding in a single day. Benchmark fuel costs inside the European Union surged 13% overnight to a record peak, having doubled in only a month to be 14 instances better than the average of the beyond decade. EU analysts at Citi warned inflation in Britain should top 18% if power costs had been not limited. European and British manufacturing surveys due afterward Tuesday had been expected to spotlight the damage being achieved to interest, with Germany visible deeper in contractionary territory. Europe's dire electricity state of affairs shows the peak of inflation isn't right here, but in the threat stays that high inflation is sticky for longer without further aggressive primary financial institution action, stated Tapas Strickland, a director of economics at National Australia Bank (OTC, NABZY). No surprise then to look the greenback at close to multi-decade highs towards a falling euro and British pound. The unmarried forex changed into suffering at $0.9929, having dropped 1% to a 20-year trough of $0.99265 on Monday. The destroy of the July low at $0.9952 became taken as a bearish sign for a similarly push decrease, with little in the manner of chart assist left. Sterling was down at $1.1755, after diving as deep as $1.1743 and levels last visible in March 2020 at the start of the pandemic. That noticed the dollar index up to 109.100 and inside a whisker of its July top. In Asia, unease over China's economy endured to percolate as a reduce in lending charges and communicate of a sparkling spherical of respectable loans to property builders underlined stresses within the region. It would be bad enough for Chinese equities if the financial system struggles were restricted to the belongings zone, mentioned Oliver Allen, a marketplace economist at Capital Economics. But boom within the services sector appears unlikely to boost up by an awful lot as long as China's zero-COVID rules remain in vicinity. The pandemic-linked export growth is coming to an quit, and energy shortages because of droughts in components of the USAVA appearance set to hobble industry inside the close-to-time period. Chinese blue chips had been off 0.5%, having obtained just a fleeting carry from the today's policy easing. China's yuan fell to an almost two-year low. CME. Fed hawks rule. MSCI's broadest index of Asia-Pacific shares outdoor Japan dipped 0.9% to hit a one-month low, and has fallen each day inside the past week. The Nikkei misplaced 1.3% after a PMI survey showed manufacturing facility pastime in Japan slowed to a 19-month low in August amid chronic rises in uncooked cloth and power costs. S&P 500 futures and Nasdaq futures each edged 0.1% decrease, following sharp falls on Monday whilst growing bond yields undermined tech shares. The benchmark U.S. 10-year yield hit a 5-week excessive of 3.040% on Monday, whilst the 30-year yield climbed to a 7-week peak of 3.268%. 10-year yields had been final trading at 3.0109%, up nearly 50 foundation points from the lows of early August. U.S. The flow in Element displays hawkish commentary from Federal Reserve officers, which has led the market to rate in a 59% risk of a 75 basis point hike to 3.0325% in September, and a peak for charges round 3.75%. The ascent of the dollar and yields has been a drag for gold, which turned into soaring at $1,736 an ounce after hitting a 3-week low in a single day. GOL. After a whipsaw consultation overnight, oil expenditures have been bouncing as Saudi Arabia warned that the OPEC Plus producer alliance should reduce output. OR prices had been weighed by using demand issues and the chance of a nuclear deal that might go back sanctioned Iranian oil to the marketplace. Brent turned into up 50 cents at $96.99, even as U.S. crude rose 63 cents to $93 in keeping with barrel.